question here from Alan. Morning, team, Token Metrics. Loving the TV shows. Keep up the good work. Appreciate it. Question. An assumption has been raised a few times on your shows that rapidly rising inflation will create a problem in the legacy markets with the dollar and the pound and will push large institutional money into crypto in order to counterbalance that. Arguably, that panic move happened in the pandemic with BTC at 60K. Inflation is becoming an issue here in the UK. We have now cumulatively printed and bought 895 billion pounds in bonds to get through a downturn and COVID, and our rates have gone from 0.7% to 1.5%. It's heading to 4% or more, double the target. Is there an alternative possibility that if we see global inflation running out of control, double digits, the central banks will just go the opposite way and crush Bitcoin and the crypto market with massive regulations in order to protect the validity of their own collapsing currencies? Wow, that was a mouthful. Let's go to Bill. Bill, what do you think?
Okay.
Can central banks crush Bitcoin?
Okay, so let me summarize what this gentleman is asking. He's saying that after a massive money printing spree, can central banks panic, jam on the brakes, start pulling money out of the system to stop inflation, right? Because that's how it works in the economics book. The Fed or the central banks would raise rates, drain money out of the economy, okay? And that would effectively crush stocks and Bitcoin. All right, so let me get this straight. Central banks are going to come in and they're going to pull out the rug and they're going to let equities and real estate crash to try to stop inflation from going to 20%. No, they're not going to do it. They're going to do it if it's totally out of control. All the FUD that's been issued about crypto, frankly, central banks are going to have bigger problems. Social disorder, right? 1 million people are still unemployed. They're still being paid to stay home, and it's not clear whether they're coming back to the labor force or not. Shortages of commodities. Pulling money out of the system is not going to solve these problems. They've made this mess, and they're just going to have to live with it, right? Because does the stock market crash make the economy better or worse? It could happen. There could be a geopolitical event. But again, once the miners who are the ones selling crypto, once they're done, crypto is going to be on sale. And I don't know how a small person with a PayPal account who has to buy groceries, right? When we do these streams, that's who we're talking to. How do these people protect themselves against the fact that the tires for their car, right, the groceries that they feed their family are going up anywhere from 5 to 20% clips? The only way to do it is to have crypto. I mean, it would be a dream to see Bitcoin at 20K, right? Because that way, all the small guys could just push the buy button and get in and hodl it and hang on for the next year. So at the end of the day, I don't see central banks crushing Bitcoin because they got much, much bigger problems.
All right, thank you, Bill. Forrest, any comments on this?
Yeah, I completely agree with Bill. I think he's absolutely spot on. I think they have much bigger fish to fry. You look at Bitcoin, it's $728 billion market cap. It's under $1 trillion. The total asset class is $1.6 trillion. It's still very early and it's still very small. If we were at a $25 trillion evaluation for the entire crypto asset class, then maybe I'd be a little bit more worried. But I'd also say, I mean, if inflation goes through the roof, which it probably will, and then regulators started pumping the brakes on Bitcoin, how much worse would that make you want it? How much worse do you think everybody would want Bitcoin and other crypto assets if regulators were fighting against it and there was inflation? Right. I think if anything, that would change people's minds about crypto, and they would view it more so as a life raft if regulators came in to step in against it.
All right, thank you, Forrest. Yeah, I mean, I have to echo the same thoughts. This is why crypto was designed to be owned by us, the people, not regulators. So they can't really shut it down. They can try to slow it down, but at the end of the day, the people will still win out, in my opinion. So if inflation is coming, people are losing purchasing power every single year, and now even much faster. So this is why we say not being in crypto is a financial crime. And the good thing about crypto, it's your own bank. So I mean, it's very hard to shut something down if people are their own banks. So if 6 billion people have crypto or Bitcoin, they have to shut down 6 billion banks, and I don't think they have enough firepower for that.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.